Welcome to Short View Trading. It's your morning market hit for Monday, 11th of December. My name is Chris Watling. I'm the CEO and Chief Market Strategist of Longview Economics and Short View Trading. And I wanted to talk to you this morning about how to trade equity index futures on a 1 to 2 week basis. What do you need to know? What do you need to think about? And how should you go about trading those equity index futures? Whether it's S&P500 futures, Nasdaq 100, Russell 2000, FTSE DAX, etc. All of the above. What are the key factors? That's what we're going to dig into in this video. And the first thing you need to think about is contextualizing the market. What's it been up to? And therefore, how's it set? And of course, if you look at markets over the course of the last week, US markets are pretty flat, but really consolidating through most of the week. Most of them plus or minus less than 1%. Indeed, as you can see on the chart in front of you, that's weekly performance of many of those key US indices. Apart from the S&P500, the small caps, which were up over 1%, and the Dow Jones Transportation Index, which was off more than 1%, the rest of them were less than plus or minus that 1%, as mentioned. The S&P500, for example, closing up 0.2% on the week at a new multi-week high, but only just. European markets did better. The weekly performance is more impressive, many of them putting in a 2% plus week, and an index like the DAX up over 2% last week, and as you can see on this chart in front of you now, gone vertical in recent weeks and continued to do that last week, hitting new record highs. But for the S&P500, it's really been a pretty tight trading range in the last few weeks. Indeed, since 21st of November, as you can see on this GIP chart we're putting up in front of you now, the index has traded in a very tight range of about 50 or 60 points over the course of those last few weeks. That pattern continued last week. That's, of course, the typical seasonal pattern that you get in December. As you can see in this seasonal chart we're putting up in front of you now, December tends to be very flat to slightly off in the first half, and then the Santa rally gets going in the second half, and it's the last 2 weeks of December where you get that strong, steady uptrend in typical markets. And indeed, the Nasdaq 100 is very similar as well in terms of its seasonal patterns. Again, putting up in front of you that classic December seasonal pattern. This is showing you all Decembers with a median and quartile ranges since 2009 in the Nasdaq 100, just as we just showed you on the S&P 500 as well. Now, interestingly, as you look forward over the course of this week, the middle of the trading month in terms of day 11 occurs on Thursday, which is when you tend to get the low in the seasonal pattern. Ahead of that, we've got some very big events that may well contribute to volatility. In particular, we would highlight two. You've got US CPI on Tuesday. Inflation, of course, has been critical. It's been coming down more than people expect across Western economies in recent months, and that's been encouraging the bulls. And of course, already given that sentiment, there's a risk that may be worse than expected. Inflation comes in higher than expected, creates a bit of volatility short term. That's Tuesday's key event. And then on Wednesday, we have the Fed monetary policy decision, the press conference from Jerome Powell, the summary of economic projections, and the dot plots, which is included in that summary of economic projections, the SEP, as it's called. Powell, of course, speaking adds to the chance of volatility on Wednesday. In the press conference, we've seen quite a bit of volatility in recent Fed meetings, so it's perfectly plausible. He laid out his stall 10 days or so ago, the week before last, when he gave a key speech. But equally, he may want to push back a bit on those rate cuts that we've seen priced in to the curve next year over the course of the press conference on Wednesday. So that adds to possibility of volatility in the first 3 or 4 trading days of this week. On top of that, you've got the ECB and the Bank of England on Thursday. And then, of course, you get to day 11 Thursday, the middle of the month, potential for the Santa rally to begin. So if you want to find out more about how we're playing this market and keep up to speed with our thoughts each and every day and our recommended trade on S&P futures or other equity index futures and all our short-term market timing models that we update each and every day in the Daily Rag, please take a free trial to the Daily Rag, also known as the Rag Trader. Simply click on the link below and give us your name and email address. No credit card details required. We'll give you a trial of the product for a bunch of trading sessions to see if you like it. And equally, if you're a subscriber, you should have the inbox in your email before 9 a.m. London time each and every business trading day. So what are we watching today and this week? Well, over the course of this week, there's lots of key stuff going on, as I just mentioned. The first theme, as highlighted above, US CPI and the Fed Tuesday on Wednesday, then other central banks on Thursday with the Bank of England ECB. And then the third key theme is that there's plenty of macro data over the course of this week that's going to be critical. Lots of Chinese data. It looks as though total social financing data is coming out of China. That's the monthly lending data, probably on Wednesday, but one never knows until it turns up and is published. That's key though. Money supply growth has been very poor in China. Lending's been flat relative to recent years, and the economy, of course, is in a lot of trouble. On top of that, we're going to hear more on Friday on Chinese data with retail sales, fixed asset investment, and one or two other key data points. Elsewhere, you got flash PMIs across the globe on Friday, first sort of take on December's economic activity, and then US retail sales on Thursday. So that's it from us. That's your morning market hit for Monday, 11th of December. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button and like and share on social media, or follow us on Facebook, LinkedIn, and or Twitter. Thank you for listening. Stay safe. Trade well.